You are listening to chartingwealth.com for Monday, the 10th of August, 2015. This is our training and trends. We're starting off with training. Been getting a lot of questions about how much you like our charts and is it okay to use them to trade just on the 4-hour chart. We've talked about this before, but we do have a darn good chart. Occasionally, you'll get a fake out, as we see between the 4th and the 5th of August, where it looked like the chart was moving down, then it popped back up, then it moved down again. But if you will notice, it never crossed back over. Our chart told you ahead of time starting in the morning of the 4th of August, we had a crossover going down. It then bumped up on the 5th, but then rolled right back over and went down substantially. And there were those who asked, is it okay if I got in on the 4th and stayed in and wrote everything down? Absolutely. If you want to trade on just one chart, that is just the 4-hour chart, you can do so, but you can have problems. You can have problems where you're faked out, but if you check out the fake outs compared to when the chart really works, it is about, and you can go back, this is what we talk about all the time. In fact, I've done recordings on this, going back and actually measuring when the chart works and when it doesn't, and seeing if you've got a good enough chart to trade. And of course, the chart we've set up right now that we have here is available to you for free. It's at freestockcharts.com. If you sign up for our newsletter, we'll actually email you a layout for this chart. All you got to do is just hit the link. It'll pull it right up there in freestockcharts.com, and you'll have our layout and you can trade it. Now, when we say trade it, we're talking about practice trades. We are educating. We are not a stock calling service, nothing like that. So I would encourage you to try, but you can do the math here. You can look when it crosses over on the 4-hour chart and you hop in, you can see that it does roll up. It does give you out points. When it rolls down, it does tend to give you a good entry point. In fact, it'd have been a great entry point if you'd have gotten in right after the crossing when it was tipping up and then rolled back over. But the entry point was not bad, particularly in light of where the markets have gone. And again, you can see when we go back to the 4-hour chart on the 22nd, if you would have gotten in that afternoon, you could have ridden that down substantially. If you would have gotten in on the 10th, you could have ridden the chart up substantially. And again, hiccups do occur. Look at where the chart bumped up and then rolled back over and went down. It didn't go down that much, actually, and then it popped back up again. So you have to take your losses with your wins, and they have to balance out in the positive category. How do you do that? Well, go ahead and preset your loss column. And when it gets hit, you can just get out. Or you can set up a chart and just go with the chart and be willing to get knocked out by the chart only. Folks, it just depends on the kind of training that you go through, how much you practice, how comfortable you feel with your chart when you actually tweak it out. And of course, wonderful thing to use too are trend lines. We love our trend lines. This is a trend line set on actually a 2-day chart. You can throw trend lines in there also and track up and down movements. And when your trend lines are broken, you can simply get out of movements, or you can continue to move those up as you go and hop out when they're broken. We've got great training online about all the things I've talked about trend lines, about the charts themselves, about looking back and using the charts as a prior roadmap. And do be aware that as you go through different trading zones and things happen, charts that once worked might not work anymore. Some charts work certain times of year. Now remember, when we're in the fall-winter trading zone, which we're not in right now, we're in the summertime trading zone, which can be a lot more choppy. There's a lot less volume. The market can be controlled more easily by some big players than it can when there's lots of volume. So what does that mean? Well, be aware of that. When we get into the fall-winter trading zone and the big money comes back in, you can see trends that are more easy to track. And again, it depends on Is it a pre-election year, an election year, a post-election year? Again, we love talking about Stock Traders Almanac and what Yale Hirsch and his son Jeff Hirsch have done. Always, required reading by me. I carry it in my briefcase all the time. Stock Traders Almanac, great stuff. They've written some great books about trends. All sorts of people write about those. Trends are important. The stars move in a trend. They have patterns. The planets do. We have patterns, sunrise, sunset, waves, you name it, tides. Pay attention to patterns, and when you can find those, you definitely want to use them when you're training. Now, that is enough about the training portion of the broadcast. Let's jump into what the markets are up to. We're going to go to the 2-hour chart and look at, the 2-day chart and look at the markets real quick. Substantial down movement on Friday, knocked way down. We had an upward trend line at one point. We had a doji, spinning top, and then, of course, lots of indecision starting back on the 4th and then the 6th of August, and then major down movements today as we ended the week. Crossover, and here's something to always look for. When you see a crossover on the MACD, as we saw between the 4th and the 6th on our 2-day candles, and as that occurs, you see your derivative oscillator flip over. Usually when they cross together, they tend to be stronger when they don't. Now, if they happen the same exact time, that is even stronger. It happened right about the same time on the down movement on the 6th. Watch for that. See what's happening on the 4-hour chart as far as the total market goes. Significant down moves both throughout the day, today on Friday and yesterday on Thursday. That is where the total market is. SPY, which is Standard & Poor's 500, typically is similar looking to the total market. It is here. Crossed over exactly at the same time with the MACD and the derivative oscillator. That's a strong sign of a cross. Pushed through the 2-day trend line at the same time. What does that tell you? When your trend line's violated at the same time that your MACD rolls over and your derivative oscillator rolls over, tells you there's some strong downward movement. Probably going to be a good down trade. When we look at the 4-hour chart, what do we see? The half-day chart, same kind of thing. Breached the trend line, crossed over. All of that action occurring at the same time as the 2-day trend line was violated. It means there's a huge push down in the market. Good time to think about getting in on a virtual trade. Now let's go to the Qs and let's look at the 2-day chart first. The Qs is now moving through. Looks like it's crossed over going down. The derivative oscillator moved over just a little bit past that. But again, a strong down move on the latest 2-day candle on the Qs. Crossover going down the 4-hour chart, of course, the same. Although the Qs could be, it's hit basically the same bottom 3 times. You can see on the wick on the close of the day on the 6th, Thursday, hit the same point that the market closed on the 4-hour candle on Friday morning and Friday afternoon. Just interesting to look at. Derivative oscillator still moving down, crossover between the 4th and the 6th. So that is where you are on the Qs. Now let's go to gold and just see what gold's doing first on the 2-day chart. Gold is still in a confirmed down move, as we have said since way back on the 23rd of June. Continued to move down and then started sliding sideways around the 23rd on our 2-day chart, and is still sliding sideways. It has not gained back even what it lost on the 27th of July. Sliding sideways, do have a green candle. Derivative oscillators losing its speed. It looks like the MACD is trying to come together and crossover going up. Look at that. Pay attention to that. You might have a buy-in point coming soon on gold. We have had a crossover since the 27th on the 4-hour chart, but on gold you can see how it slipped sideways. It's still not as high as it was on the 27th yet. So continue to watch gold, particularly if it rolls over a little bit and then garners some speed moving back up. You might find a good clean buy-in point. So pay attention to that. Hope that you had a great week trading. That is where the markets ended up on Friday for the week. We're down on all of our indexes. Gold is still down. but it looks like it's trying to push itself up. It may do so over the next few days or few weeks. Let's just keep watching and paying attention. The markets are a blast, lots of fun. Hope you enjoy your investing. Always join us at chartingwealth.com. We love to hear from you. Follow us on Facebook and Twitter and Instagram. Take care. We wish you the best of trading. Goodbye.